Good evening, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Thursday, March 7th. We are almost done with the trading week, and this was a very interesting day. It feels like we've had something to definitely talk about and go over in detail in each one of these days. This market has been keeping us on our toes. For now, what we continue to see is these dips that we're getting, like they right now. They are like, basically 1 day dips, and then the market comes right back. So what does that mean, right? Why are we seeing such shallow dips? All right, so I'm going to talk a little bit about that. I'm going to talk a little bit about what kind of market that we're in right now. Before I do that, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. All right, so let me come back to those points. I just want to go over what we did for the day. S&P up 1% for the day, Q's up 1.5%. Small caps, no slouch for the day, up about 80 basis points. Bonds, basically, that's actually wrong. That's what they did over the day. Bonds were just down. TLT were just down 1/10 of a percentage point, and more dollar weakness. I have to say that's something that's very interesting, right? I talked about that. I spent a minute or two talking about the dollar yesterday, but just from generally, right? And all I'm talking about is in general terms, not like oh geez, the dollar's down, that means equities are going to skyrocket up. Well, that kind of has been happening, but it does mean to me that it's more of a risk on type market to see the dollar move down, basically as much as we've seen it do over the last couple of weeks. Right, that has been a risk on sign for the market, and that's basically what we got. Semiconductors in terms of sectors, holy cow! I mean, just another huge move, up about 3.5%. Of course, there's some names that are getting hit in the after hours. If you look at Broadcom, right, which I think is on the list here, or it was on the list, it's down about 4%. Also, Marvell down about 8%. But I would say that this group, kind of coming into these earnings reports, pretty much priced to perfection. The rally in some of these things has just been, just amazing. So I'm going to talk about the indices first, and then I will talk a little bit about what kind of market we're in. I'm just going to use Thinkorswim charts for a second, and then I'll use some trading view charts too. But back out to new highs again. So just very quickly, so this type of dip that we're in, or this, 1 day dip, and then, same thing as what we saw a couple weeks ago, right? A dip, and then basically a rip. Now, this wasn't exactly the same, right? I compared earlier in the week, what we saw with prior to NVIDIA earnings, a little bit of hesitation, a little bit of profit taking, right? And then once they had strong earnings, the whole market kind of ripped higher, right? And similarly, like, I don't think CrowdStrike is as big of a, matters as much as NVIDIA does, but we did see some selling pressure into that, and that had a nice move. And obviously there's many other reasons for why we rebounded, but we kind of had like a somewhat of a W recovery, right? Here was the lows, bang on the bottom of value, and we rallied a little bit, stalled yesterday, came back in a little bit in the overnight market with some of the central bank meetings that are taking place, and basically like a W type recovery. So and back out to new highs. So very impressive. So why is this happening, right? Where the dips are so shallow? Well, I think, given how quickly the dips are getting bought, it tells you that some people just got trapped out of this market. I was talking to a colleague a couple days ago about this, and they were saying, geez, if I can only get I'm looking for like a 2 or 3% correction, I've been so left out of this rally, right? And I can get involved, right? So that's just one person I talked to. Now, that's not the whole market, but that's a person who's, not an active trader. But I think that that's what's really going on here. The market has not really provided much of a pullback for people to kind of think about the market and, deploy some funds here and there. It's basically been, since November, right? We had a little bit of hesitation there in the beginning of the year, but other than that, I mean, we're dealing with a super strong market. So there's a lot of people that have just not been able to kind of get involved, as much as they would have in the last couple months, right? And some people have, and some people that's, probably your less active traders just, are probably looking at this and they just can't believe how quickly the market has gone up. Same thing with me. So I think I'm going to kind of answer one of these questions, and that's one of the explanations. But we're also at this point, we're in a momentum market. I was listening to CNBC and a strategist came on and was talking about valuation, like, oh, well, now we're probably like fairly valued. Come on. I don't think that you could really talk too much about valuation here. We're in a momentum market, and this happens from time to time. We've seen it happen probably 3 or 4 times over the last 3 years. So what's the, what do you do with a momentum market like we have right now? Well, for me, and I'm a trend trader and I like when markets trend like this, right? And my job is basically to try to not guess when this rally is going to end. It's just to basically be smart, right? Make adjustments, take some profits in some trades as we go up, have some skin in the game, right? And then realize when the game's over, right? And that for me is, I use the value areas, I use moving averages. A lot of times the value areas are coinciding like they are right now with the 20-day moving average, right? And I think that's pretty good to kind of watch and say, hey, this is your point for when you're really going to reduce risk, right? Right now, I've kind of gone back and forth with as many swing trades as I'm carrying. I've gotten to a couple places like over the last 2 weeks where I'm like, hey, you've got a couple, too many swing trades on, so I reduce my risk a little bit. Everybody's different with how many trades that they like to carry. I like to carry some when the market is trending like this, somewhere between like 7 to 12 swing trades. Again, when the market's doing this. But as we continue to go up, what I like to do is try to take profits, right? And I've gotten to a couple times over the last, few weeks where, I've had close to like 15, I've had around 15 swing trades on. And again, those are not all full size position swing trades. A lot of times what happens is I take 2 or 3 targets and I'm just letting the last portion of that trade ride, right? So, it's never 15 like full on swing trades, but, they're trades where I've taken 2 or 3 targets. Members and so forth know about these, right? Because I send out my open positions twice a day to them, right? Send them out in the middle of the day. We have a midday note and an end of day note. So I have all that, every time I send that out, it's marked to market, right? About where the gains are, or where if the name's down, how much it's down, and as well as how many targets I've taken in the trades, right? So that's one way I really kind of stay on top of risk. But as we start to grind higher, generally like what I do is try to peel off trades, and especially like tomorrow, we have a jobs report tomorrow, right? So that means that's an unknown, right? I don't have a crystal ball. I know a little bit about what will happen tomorrow. For example, like if the jobs number's hot, right, the market will probably sell off a little bit, right? And same thing, like I view this average hourly earnings month over month as actually more important because that is one of the a little bit of not a gauge of inflation, but it's a component of inflation. So if this number's hot, right, that means that the market will probably give back. Its initial reaction will probably be lower, right? Because good news is bad news for equities right now, because everything amounts to, what the Fed might be doing in terms of whether or not they can cut rates, because they're not going to cut interest rates if inflation is still hot, right? And that's the world that we're living in right now. Now, another thing that's fueling this market, and I made a comment about this earlier because we do have the State of the Union tonight, right? I heard one headline today was about offering first-time buyers home credits and so forth. I mean, we're in like a very heated political situation, and I don't talk about politics in our trading room, right? I keep that out, but we do have to be aware of when some things like, hey, if everybody always talks a lot about monetary policy, right? but they don't talk about fiscal policy, right? And these things go hand in hand. If you've taken an economics like 101 class, right, you know that there could be stimulus in two different ways, right? It's both what fiscally happens as well as monetary. So as much attention as Jay Powell gets and so forth about interest rates, that's only half of the equation. The other half is about what fiscally they're doing, right? And they're continuing to provide stimulus, right? And also there's still, the debt is going up higher and higher and higher. Now, I don't have any of the answers to those questions about when that's going to affect things, but for now, they're still pumping money into into the market. So while the Fed has raised interest rates, right, you have these two counter actions right now. So it's not, and that's why some people, like, it's a head scratcher to them to like, geez, I don't know why the market keeps going up, because they've raised interest rates. The interest rates are not low. Well, you got to look at both sides of the equation. The Fed is not the Fed. The federal government is not slowing down in terms of spending one bit. In fact, they're actually trying to create more stimulus, right? So in any event, you kind of have to take, you kind of have to have a bigger view about what's going on in this market right now. Now, of course, I'm going to come back to now. Let me get back to the matter at hand here. But right now we've got really good participation. One of the things that I generally look at when we rally on days like this is, are we doing it on strong breath or are we doing it on weak breath? We're doing it on strong breath, right? And look at the breath today, which again, this looks at up volume versus down volume, right, across different exchanges. That was strong. Right. Well, what about, like, in terms of, because I've heard this before about, and that's why I really pay attention to this. But here's 4-week new lows versus new highs, right? Look at how many 4-week new. So two things, right? When you're looking at this, right, and this gets sent out in my Substack every day. I post the 4-week new highs versus new lows, right, to spot some divergences, or if this is telling us what we want to, basically what we want to see when the market's going up, right? And I mean, this is 158 new highs, right? There's only, of course, 500 names in the S&P, right? That makes about 31% of the S&P made 4-week new highs today. Is it just in one group? So this is the other point. Is it just a few names that are carrying the market, or is it a lot of different groups? I think just by, again, this, you'd have to kind of zoom in on this a little bit, which I can do for you, but it's a lot of what we've talked about for quite a while now, is that it's a lot of industrials, right? It's a lot of financials. It's some healthcare mixed in. It's some consumer names mixed in. You've got material names mixed in, and you got tech. Obviously today, if you look at some of these tech names, right? Let's see if you, it's a lot of semiconductors, right? And names like IT that are in there too. Some consulting type names in there. But yeah, awful lot of semiconductors in this group. All right. So let's look at a couple of these groups, right? And then so right now that's confirming what we're seeing, right? Eventually we're going to get to a point, right, in any rally, right, in the short term, is that things are going to start to kind of diverge a little bit, right? Or they might confirm, there might be price action to the downside and new lows are picking up, which basically tells us to kind of make adjustments in what we're doing, meaning take some trades off, take exposure off, maybe even have a hedge onto the downside. But yeah, here's the semi ETF. I mean, this thing is ripped to the upside, right? It is very hot, and it will probably correct a little bit with a couple of these names down after hours, unless Broadcom says something, in their conference call that reverses the stock. But this is superheated, right? And this is the market. This is the market leader right now, right? Is what semis have been doing, right? In terms of the velocity that and momentum that's been going up, right? Now I can bring up the industrials too. They're kind of doing the same thing up and to the right, but clearly not as fast, right? It's been more grinding higher. The home builders, very, very strong as well, right? And so there's plenty of groups that are doing this. XLB is another one, right? This is the materials, right? I've talked about this for the last couple of weeks, saying that this group has joined the party. Take a look at what copper is doing too, which I found this very interesting today. I think this is the right one. I apologize, I posted the wrong chart earlier, but even copper is trying to get going here a little bit, right? I know a lot of people are talking about energy, right, and crude. I'm going to say, okay, I think it's okay to have some exposure to there we go. I got the wrong thing in here. To energy, but I don't know if that's really going to be the leadership. Well, I got the wrong. Let's try this again. Futures, and I want crude. Crude oil futures. I think this, here we go. Right. So here's what crude looks like. We're right at the top of value. And I'll get more involved, more interested in crude and in energy stocks if we break out above the value area. All these other areas are trending above their value area for the year. Crude's not there yet. Energy is not there yet. Right. So here's XLE, right? That's also, and I took my profits in an energy trade. Why? Because I was long XLE. Why? Because we hit resistance. Right. So this is not uptrending yet. Right. Yellow like this means we are inside value for the year, and I will wait until we get above. Now, there's certain pockets of energy that are doing fairly well. Right. The refiners are doing great. Right. The refiners, right, which is a group that I've been overweight in the TGG trend portfolio. I've been long MPC. I've been long Phillips 66, which I just showed you a chart of that. But yes, this group is doing well. So this one, I think you can kind of continue to be long in. I'm also watching the uranium stocks, right, which have dipped in an uptrend, right, and are now trying to come. Oh man, I can't type today. Here's uranium, really nice green, nice turn. But do you see how defined the trend is here? Really nice, move here. I must have done something wrong here. Here's what the weekly chart looks like, right? Uptrend, right? Crude is not in an uptrend yet, right? In terms of the value areas. So, so this is something I did get long some NXE today, right? Here's the NXE chart, right? This is a small cap name. I call this little CCJ. There's a weekly chart for CCJ trying to turn here. So there's some opportunities here, right? But I don't think they're as widespread as the industrials, the home builders, right? Look at what Pulte did today. Right? This is a name I got long a couple weeks ago, right? Out of this break, very nice. Lennar made a new high today, right? And even the names that go into building a house. Look at AOS. This is a name long. I took a profit target in, right? Here's my. I was also long some JCI, right, which has done very well. CARR is another name that we've been seeing option activity, right? All these names that go into like building a house and maintenance into a house, right, have been very, very strong as well. Right. So I know, everybody, does pay more attention to the bigger names, right? Those names had a good day today too. Yeah, plenty of things. Kava was a good name to kind of switch gears, right? Thank you guys for the other day. You guys mentioned to me that I couldn't think of the old artist that used to do those videos and used to say like, oh, it was a happy little setup here. And as a Bob Ross, thank you very much. But I'll tell you, this worked quite nicely, right? I talked about how this had a little gentle pullback here into the top of value and got going. Was a little bit tricky yesterday because it opened up strong and didn't close that way. But what I liked yesterday was that it held the top of its or it held the 5-period moving average quite nicely. All right, guys. So I'm going to wrap up the video here. Again, there's plenty of other things to talk about, but those are the main points. And instead of trying to justify it with valuations and so on and so forth, we're in a momentum market. Realize that, right? And then when the momentum changes, then we can act differently, right? And make some adjustments. But the goal, and again, like this was a tweet that I sent out this morning. So one of the hardest things to do, right, is just to stay put and sit in some trades that are really working until they don't work, right? Because again, no one knows how long a trend is going to last. Everybody always tries to time it with fibs and everything and every other stupid thing. But sorry, but price can do what it wants. It may pause at one of those levels, but usually like things make it through. And I think what you've seen more often than not is areas have been coming up to resistance and breaking through it, right? So it's better to have it's better to have a trailing stop in names and just to basically try to sit, right? Rather than come up with a whole bunch of ideas about what could bring the market down. Oh, it could be this. Oh, it could be this. Oh, it could be, just pay attention to what the price action is telling you and whether you're seeing more things go up or more things go down. Guys, have a great night. I'll see you tomorrow.